Hey guys, Kill Stokes here. Welcome back to another Trading Edge video. Got 5 charts I want to jump into today, but before we do so, I got some great news for you. I finally have a registration link for the upcoming Trading by Numbers workshop. Remember, this is the free 4-day online trading workshop that I've been telling you about for a while. 100% free, 100% online. Just head over to the link, which is in the description box below this video. Save your seat and get ready for 4 days of massive education. Also, if there's a comment that if there is a subject that you want to learn about, we're still putting together the course material, so leave a comment below and we'll add it to the mix and see if it makes the cut. So we're gonna get started here on the pound dollar. This is something that we looked at, I believe either last week or the week before here in the Trading Edge video, and something we've been tracking in the live room on a daily basis. And what I'm looking for is a complex pullback to reach our second level. We did come to our first level where we were interested in the market. We're not able to get, at least I was not able to get an entry reason. So now we're looking for a complex pullback, which is a multiple leg pullback. So for you guys that saw the reels or the short video I put out the other day, a complex pullback is essentially a micro trend in the opposite direction of a bigger trend. So it's going to look like a bearish trend, but it is only a bearish trend representing a pullback or a retracement in a bigger bullish trend. So if I take the length of this move, and I'll change the color here to make it a little bit easier to see. Let's go for a little pink. There we go. Maybe that was better. Maybe it was not. Let's go yellow. If I change the color here, or sorry, if I take the equal measured move from this swing high to this swing low, that's going to be our A to B. If I drag it onto the retracement right here, that would be our B to C. I'll draw that in a little bit. And what we're looking for is an equal measure move. An equal measured move would come right back down into that bottom zone that we have identified. This is not only a bottom zone of structure, look left, structure leaves clues, but you can see it's also the area where our volume starts to pick up again, right around this or right underneath this 127 even handle. So hopefully we can get a pullback down there and then look for the next extension higher here on the pound dollar. Another pair where we're looking for a move higher is going to be on the euro yen, and this comes in a little bit of a different type of way. Where the last trade was a pullback trade, this is more of a breakout / pullback trade, right? Price has just violated our most recent level of structure right here. You can see the higher high, higher close. We've thrown in an inside bar to end our week, which means consolidation. We'll see this as we go down to the lower time frame. The question is, do we think price is likely to go higher? And if so, where? And the level that I think price is going to go higher to is right here, right? For you guys that have been following my video, you know exactly what I'm about to click and put in. Our elephant candle, right? That's kind of the cue we use for supply and demand levels right there. Typically, I believe that, or not typically, I do believe that price or structure acts like a magnet, and typically it's drawn to these type of levels. So if you can understand how to identify these levels, it gives you some really good and precise projection points on where price is likely to go to. And that's the first step of the equation, making that prediction of what is price likely to do, then making that prediction of, okay, well, if price is likely to do said thing, where is it likely to go? Then you measure out there's enough room for profitability. Then the final step, which is what most people think is the first step, how do I get involved, right? The problem is so many people think about getting involved, they don't think about the other things, and they end up getting all these cool entries, but they're nothing more than entries in bad or non-existent trading opportunities, and they wonder why they're losing money. That's a story for another day. We got a whole workshop to kind of talk about the struggles and the mishaps and missteps that many traders make, so make sure you attend that workshop. But essentially what we're looking for is a move from where we're currently at right here, 162.26s, all the way up to this level right here. Let's call it 120 or 162.77s, right? So 50 pips or so. And of course, if you go down to a lower time frame like the hourly, you're going to get a much clearer picture of kind of the consolidation that happened after we violated this level. And you'll be able to look for either a breakout to the upside, or again, look for a pullback trade in anticipation of that move higher. So we did a bunch of continuation trades. Let's talk about a counter trend trade move here on the New Zealand dollar, right? If we look left, we can see previous price action gave us a nice little, if I can get my arrows right, nice little consolidation area right here. Again, look left, structure leaves clues. The past price action gives us clues about what we can anticipate in the future. And if the market is going to run out of steam, which we're already doing with our deceleration pattern right here, right? You can see the steep slope and then the kind of the shallow slope. This is a good level to look for some type of relief, meaning that the sellers are no longer interested because they're coming down to a previous level of structure. So there's going to be less sellers interested at this level. Sellers are also going to be becoming buyers at this level because they're taking profit. If you need a better kind of explanation of that, make sure you watch the previous video I did here about kind of the mistakes that many traders make during high impact news events. If you trust me, if you haven't seen it, you'll probably never look at market movement the same, but it gives you some clues of what to do and why the market does what it does and when to stay out, which is the most important lesson. But then you have more buyers as well, because again, it's a previous level where price action stopped the selling pressure, kind of halted for a little bit, and then we saw buyers enter the market. So pay attention to this level, right? RSI is oversold already down below, super oversold. My oversold starts at 20, which is a little bit deeper than the default. Oversold already. We're decelerating into this previous level of structure. Would not be surprised if we saw a little bit of relief. Now, just keep in mind, relief doesn't mean that we're gonna shoot all the way back up here and go to 62 even. No, relief just means a short period of bullish momentum. And as traders, in a true counter trend trading sense, what we're trying to do is we're trying to get in, we're trying to get out, get our money, and then keep our hands dry until the next opportunity. NZDUSD is next. So this is a little bit different, right? With New Zealand dollar, how we were coming down to that previous level of structure and we were so far holding. NZDUSD is a little bit different, right? We've come down to a previous level of structure after consolidating here. And you can see that we broke and closed below. And if you're someone that finds yourself kind of, I guess, not knowing what side of the market to be on, I highly recommend implementing kind of black and white trading rules. If you notice in my trading, when it comes to structure, my trading rules are simple, right? If price action holds, then, like in this example, then look for bullish opportunities like in the New Zealand dollar. If price action violates, then look for a continuation in the opposite direction, in this case, short. Now the question is, well, what is a hold? What is a violation? Well, simple. A violation is a lower low, lower close, a break below, and a close below. A hold is anything that doesn't do that. And now when I look at a chart, it's simple. I don't have to kind of guess, ooh, what do I predict? What do I think? What do I this? It either did or didn't, black or white. And that's the way we can kind of still be discretionary traders, where we have the flexibility to kind of analyze and interpret the market, yet work within a strict set of rules. So we have that lower low, lower close, which allows me to think or project that we're likely to continue lower. If we're likely to continue lower, then where are we likely to continue lower to? Well, my next level of structure right down here. Can draw me another little elefante on right here. I think that's Spanish. I learned for like a good 3 months this summer, and then I stopped because the situation changed. But I was planning on something and it fell through. And anyway, this is a decent level to project. We can bring some volume in there as well, just to kind of see if there's anything at that level. Let me do that again. I've got a sticky mouse here. Really not a lot of volume at all. You can see it jumps up a little bit when we get to this level, so that kind of confirms it, but we're not getting too much there. But yeah, you can jump down to a lower time frame and look for reasons to get short from our current level right here, which we're already pulling back on, as you can see here on the hourly, down to our level down here, right at our previous level of structure. So if you like this style of trading, make sure you attend the workshop. Again, March 25th. It's a 4-day free online trading workshop. We're going to break down this in much simpler terms. So I know we kind of go fast through this video because I want to make it short and quick, because you guys have very short attention spans for the most part. But if you want kind of a remedial look at it, right, in the trading by numbers event, we're going to really show you what the dots are and then teach you how to connect them in a way that's going to allow you to become a consistently profitable trader. So make sure you register for that event. The registration link is below. And also, if you're a fan of the Trading Coach podcast, if you're someone that has maybe gone for a funding challenge and maybe found some hardships or struggles, I got a really cool interview with a trader we're working with who is going through the process of getting funded, has reached a few obstacles, a few challenges, a few hardships, and is trying to work through that process. I think it'll be valuable for anyone who is currently going through that or think they may potentially go through that in the future, to listen and just see, how do I handle this situation, whether it's a challenge or not, in the future. So check that out, the Trading Coach podcast. This episode should be coming out Sunday night, Monday, depending on where you live. As always, available on your favorite podcasting app. All right, take care. And until next time, plan to trade your plan.